So in this video, we'll be talking about stable coins, what exactly is central bank digital currency, and why it is, how it works, and what exactly it entails. So this central bank digital currency, I've been talking about it, is like they want to bring, since cryptocurrency has been the talk of the town, and all everyone is talking about it, everyone wants to use it. Now the government, they are planning to use something like a cryptocurrency, but yet it is you know a fiat currency. It's like the US dollar, is like the UK pounds and the euro and all that. So this is where the central bank digital currency is being born. Okay, so this central bank digital currency now is is not like cryptocurrency, which they are volatile. Okay, I think I missed that step about the properties of cryptocurrency. They are very volatile. They don't remain one in one value. So we'll be talking about that though when we talk about the stable coins. Okay, so now what exactly is stable coins? Now, stable coins are because of the volatility of normal cryptocurrency. So, programmers or developers have realized that there should be a need to create a digital currency that that you know that basically will be like in form of uh the normal our US dollar and normal euro and pounds, and that basically will not be shaky or will not be volatile. Volatility means that it can go up or come down. So a stable coins are basically coins that they basically you know uh exist. They don't appreciate, or they don't have so much volatility. The highest they could go is from 0.5 dollar, 0.59 to $1, 0.59 to $1, 0.587 to $1, 1.0, 1.2. So this is uh what stablecoin is all about, because cryptocurrency naturally, or in their nature, are volatile. Okay, all cryptocurrency are volatile. So for this to be created, it has to for because since cryptocurrencies are volatile, and you want to save your money, or you want to keep your money against the volatility of the market. Maybe the market could drop at any point in time. So because of some certain reasons, you might not want your money to devaluate at that point in time. uh, this is also like a protection against dumping in the market. So uh, that is why the need for stable coins were created, and now stable coins are really adopting in the market. Initially, stable coins were not in the market, but as the market cryptocurrency keeps on evolving, so stable coins needs to be was the need for stable coins was needed, or so it was created. So I wanted us to talk about some of these stable coins. Now, some stable coins project even attempt to fix a steady value using algorithms. Okay, the general idea of stable coins to produce a crypto asset whose value isn't prone to extreme volatility, like I explained earlier. Now, the most popular stable coins are Theta, USDT, True USDT, DAI, Pexel Standard. I think we named some of all these cryptocurrencies while we're talking about some of all this cryptocurrency, the Gemini dollar. There are so many more other the BUSD. There are so many other the stable coin out there in the market. So uh, okay, I wanted us. I explained this though, but I think it's quite important. We take a look at it. He said this is very effective, especially during bear market, and to keep profit in fiat value. Okay, once a main drawback that this is talking about, once the market is falling down, okay, because you might with you sense that the market is going to drop down, and you just withdraw your Bitcoin to a stable coin. So once the market goes down, it doesn't affect you. So it is whenever maybe you want to buy more, then or you take your profit. So as investor or whatever you are, or whoever you are, is quite, nobody wants to lose. Okay, so it's an opportunity for you not to lose your profit and also your capital at the same time. Once you understand that cryptocurrency is volatile, it can go up and it can come down at any time. So the need for stable coin is very vital. Okay, so this stable coin helps you to still keep the value of your asset or cryptocurrency at that same level. Let's say you had $50 or $1,000 in your crypto wallet, in your crypto your Bitcoin account, your Bitcoin wallet now, and you sense that, oh, the way Bitcoin is going, it's going to go down up to, like, let's say Bitcoin was in $50,000. It's going to go down up to like $30,000, and you see Bitcoin is in $45,000, and you sense it. So you have to just, then you have to just, pick out that your $50 out of Bitcoin first of all. Okay, that your profit that you have made, pick it out of Bitcoin and put it, or you know exchange it. That's the way we do it. In the crypto exchange, you exchange it with a fiat currency, or use it to buy fiat currency. Yeah, when you use it to buy fiat currency, uh then it is now safe there. So according to your own, should I say safe, or it is now stable there, according to your analysis or your prediction, Bitcoin really dropped to that $30,000. And you could imagine, assuming you left that your 50 or $1,000, that your $1,000 in Bitcoin, for example, there, it could have dropped, like, let's say, uh, was it 20% dropping, or yeah, I think 20% down. So when it drops 20% down, you realize that you're not making any money. Instead, you're losing. Okay, so it is like an opportunity for you to be able to stay up in the market, even in that volatility, in that high volatility that the market is dumping or going down. Okay, the volatility was and still is considered a major hindrance. The volatility is considered a major hindrance in the cryptocurrency space. Sorry, I'm not reading through, like, but it's the same thing I'm trying to say. I mean, what I wrote here is the same thing I'm saying literally. So, introduction of stable coin help the crypto market to tackle this volatility stuff. So the stablecoin also are also likely to become critical component in decentralized finance, and decentralized finance is taking up the whole financial economy. I'm telling you, it's taking in a new height. Uh, Decentralized finance presents an alternative to existing financial system, with one which is built on public blockchain. the notion has recently become popular, and decentralized finance has, taken to another extreme level, and is growing every day, and stable coins are growing with it. So uh, this is a map of where stable coins are basically uh, located around the world. Uh, yeah, some created, I mean, being created in Canada, and there are a lot of countries. I think, yeah, many other countries have created their stable coin. But the one thing about it, I wanted us, one of the stable coins is the Theta, the USDT, which is one of the most popular uh, stable coin being used currently in our generation. You can use it to exchange any token for it, just as we explained earlier. You can transfer it, you can, exchange it anyhow you want it. So uh, it is like the USD. It's pegged to the USD, meaning 1:1, 1:1, meaning uh if you have $2, it is $2 that will be represented in the USD once you transfer it there. So it's pretty it's pretty nice. But there are more stable coins out there. I think that there is decentralized stable coin, decentralized stable coin, and there's this one called in between. How do I put it? I've forgotten the name, but let's. I think I wrote it here. What's it called? Yeah, why did I forget? Yeah, no. Ah, no. Hybrid, yeah, hybrid stablecoin, yeah. This is it, hybrid. But we'll be talking about this just in a jiff. I just wanted to remind myself about it because it's really why it's good you know this. Okay, it's fantastic because most of all these stable coins, it's good you know what you are dealing with before dealing with it. Okay, so stable coins uh, have different types. They have the centralized stable coin, the decentralized stable coin, and the hybrid stable coin. The hybrid are like, they are not centralized, they are not decentralized, so they are just like hybrid. Thank you. They are hybrid. Okay, so let's just take it in. Uh, Now, centralized stable coin, also known as the fiat collateralized stable coin, they are backed by the fiat currency, which is the US dollar or the or the euro or the pounds or the cedis or the naira or the yen. So these stable coins have their physical backup by our fiat currency. That is how you know the centralized stable coin. Okay, example of this centralized stable coin are the USDT. These are popular coins used. The the they are popular coin used in our normal crypto space. Okay, now stable coin uh, are basically used to for buying and selling. Probably they are used as a store of value. Probably do they don't increase in value, you just use it to save, like we explained the other time. Okay, they can be used for lending, remittance, buying and selling. uh, they can use as a medium of exchange, unit of account, pending, pegged lending. You can lend it out and all that. Okay, so that is one of the use of stable coin. Uh, okay, so now let's talk about the decentralized stable coin. The decentralized stable coin are relatively new type of stable coins. Okay, they came into the market pretty new. They don't have a central operator, unlike the centralized uh, uh, stable coin, but they are governed by a consensus of users who take part in the network, just as the miners. They are governed by they are looked out for by miners. That's just what it's trying to say. Now, the decentralized stable coin, also known as crypto collateralized stable coin, they are they are linked to reserves of other cryptocurrency. Now, the price is tied to the value of other cryptocurrency. Uh, they maintain their 1-to-1 ratio through over collateralization. Now, what does this mean? So, what exactly does this mean? What exactly does this mean? For instance, if DAI, which is one of the crypto collateralized or decentralized stablecoin, is created by this blockchain company called MakerDAI, DOA, DEO. Okay, is an example of a cryptocurrency uh, backed up by another. Now, what is this telling us? I think this is self-explanatory though. But now, this is a blockchain, just as the Ethereum network is a blockchain. This is a blockchain itself. Okay, now this blockchain created this as a stable coin for 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 its platform. Now, this maintains this $1 ratio, or 1:1, for to remain stable by utilizing this blockchain. Okay, meaning this blockchain now backs this stable coin here. Okay, I think BitShare is another one that backs this BitUSD here. There's something I wanted you to get here that I'm not still seeing. The crypto collateralized stable coins don't depend on traditional finance infrastructure and use crypto assets as collateral. Okay, this is one thing I want you to get. Yeah, they use crypto assets as collateral. Okay, is that something you got? Okay, okay, okay. So this is just the difference between decentralized and the decentralized stable coins. Now let's go down to okay, how does DAI maintain value? DAI uses game theory, uh, carefully balanced economy insensitive to continuously sustain the value of $1. Now, the same thing with the centralized stable coin. Okay, the centralized stable coin, they maintain their $1 value by back by their being by their backup by the fiat currency. Okay, so and I told you how they just fluctuate with the 1.10 $1 point some 0 cents, 2 cents, 1 cent, just like that, or 0.59 cents, 0.587 cents. So that's how it fluctuates. And same thing with the decentralized stablecoin, but I hope you get the difference in a way. So one is backed by the fiat currency, one is not backed by. One is backed by the blockchain tech or the blockchain network or the blockchain itself that creates it. Okay, so I think that is something uh, you should know about it. So this is a centralized stable coin, decentralized stable coin, uh, centralized stable coin, decentralized stable coin, decentralized stable coin. Yeah. Okay. Yeah. I think we're there. So, uh, so let's see. I think these are all stable coins. Okay. Now I wanted us to see something else. Uh, what is a maker? Maker is a decentralized autonomous. This is a blockchain that powers this DAI. I think we talked about it earlier. We'll be talking about this. Uh, what's it called? This crypto wallet in a GIF. No, no, no. Okay, now uh, this decentralized algorithm stable coins. I think it's almost the same thing we're talking about, but I wanted us to look into this hybrid stable coins. But before then, let's look into these decentralized algorithm stable coins. Okay, these uh these stable coins are still new. They don't have any collateral backing their system. Now we have two people backing. We have the ones backed by the normal fiat currency. We have the ones backed by the cryptocurrency or the blockchain itself. And we have one that is not being backed by anyone. Okay, this is a decentralized algorithm stablecoin, and they rely on only algorithm to remain or get this stable price or this stable dollar value. Okay, is that something you understand? Now, these are we're talking about stable coins, by the way. They are stable coins which seek to attain stability by using software based economy model. They are decentralized in nature, very, very decentralized. Uh, and they also are highly and complex since they need continuous growth to maintain balance. I mean, value in dollar, or that's $1 value in dollar. An example of them are the koala carbon and basis stable coins. So I want us to look into the hybrid stable coin. The hybrid stable coins, uh, like they are centralized in a way and also decentralized in a way. Okay. Now this hybrid stable coin, they okay. I think okay, Facebook did some kind of uh, creation, just quite not recent. I think it was last year, but this year they are still facing some issues to just bring it into the public. So these stable coins now is you now this stable coin owns a blockchain or has created a centralized blockchain. Yep, yep. So it makes the stable coin to be centralized in a way and also decentralized in a way. So this really explains uh, the hybrid blockchain. But now, what? How does it gains it back, or what backs it up? Let's take a look at how it remains or gains its $1 value. Okay, where do we start? The Libra, which is the DM is still also the Libra. It was Libra before it changed. The Facebook team took up the DM name. Okay, Libra being a prime example, where the social media giant is trying to develop an asset backed by a plethora of fiat currency. Now, Z largely dismissed the idea of such stable coins as they lose the benefits of both centralized and decentralized assets. Okay, you see, it's still under the. That's why Facebook is still on this thing. I think the U.S. Security Exchange Commission. I think they had they admitted or they allowed Facebook to go ahead with this project, but I think Facebook is having issues with one other agent or commission. I still don't get it clear for now. But so this hybrid stable coin is not backed by uh, it's basically it has no background, like you know uh it's not backed by crypto, it's not backed by the fiat currency. It's just there as a stable coin that takes up the nature of crypto and also the nature of fiat currency. So it's somehow confusing for many people or for others, uh, but the lack of collateral and reliance solely on algorithms to get the price to be stable means a well-funded motivated individual, institution, system. So now we came to understand that this same hybrid stable coins, and is gains all this stability through an algorithm that is highly funded. How do we mean an algorithm highly funded? Meaning this uh, algorithm needs to be always maintained with monetary funding at all times, for it to be able to remain stable. Meaning, uh, it's also a cryptocurrency. It has so much volatility. So for it to remain at a constant value of that $1, there always a certain or uh, an amount has to be pumping into it at all times. I don't know if this makes sense, but I really don't like this type of uh, stable coin. And basically, it's not that popular, or used that much. Okay, and you don't have to be afraid about it. So we have more type of stable coins, or example of stable coins rather. The BUSD is the Binance stable coin used on the Binance exchange, even more than the Binance exchange. So it's used for the buying of coins and whatever fees in the Binance exchange platform. So, like I said, every stable coins has something they want to show, or every coin rather, like I said, they have some unique or solution they have come to solve and all that. So these are the basic understanding you need to gain of what exactly is a stable coin, a central digital bank currency is forming. I asked this question: how then, if I create my own stable coin, how do I make money off it? So this I won't disclose to you, because you don't need it, because you're not creating your own cryptocurrency. Oh, but if basically if you want to know about that, you just buy the book and read about it.